Hello and welcome. This is BQ Prime. I am Agam Vakil, and we are tracking earnings this morning once again. This time, we have earnings from Global Health Limited. Well, it's been a very strong quarter. Not only are we seeing a good over 24% revenue growth, but we have seen a substantial improvement in its profitability, on account of which we are seeing an improvement in margins here. Of course, there are many factors at play as far as these earnings are concerned, but we're also a lot more excited about talking about the greenfield expansion that the company has on its cards. So on that note, let's welcome in Dr. Naresh Trehan. He's the Chairman and Managing Director at Global Health, and also Pankaj Sahni. He's the Group CEO at Global Health. Thank you so much for joining in. Also wishing you a happy Diwali and a prosperous New Year. Dr. Trehan, if I may, start off the first question with you. Your assessment of the quarter. Of course, it's been a good quarter. What do you make of it?
So if we put the historical perspective, we just completed 1 year of our journey after IPO. So yes, the numbers, of course, our Group CEO, Mr. Pankaj Sahni, will walk you through, but it has been a strong year, and the last quarter has been good. And basically, you can say that the patients are embracing us in more and more numbers, and also in more complex form, for which Medanta was really built. Medanta was built with providing the highest end of healthcare across all specialties on the same platform. So that has been appreciated by the public and the doctors. So this growth has come on the back of an increased number of patients. And if you see, even across all our facilities, including the mature facility of Gurugram, the numbers have grown substantially.
Right. Pankaj, if I may bring you in this conversation, we've seen a year-on-year improvement in your average revenues per operating bed. Of course, that so. To a certain extent, I believe that this is on account of tariff hikes coming through, and to a certain extent, this will also be a function of volumes. But can you take us through how this has panned out overall, and also how have the more mature hospitals done as against your developing hospitals?
Sure. Good morning, and thank you, and happy Diwali to you as well as to your viewers. If you look at our performance across the units, we divide them up into the mature hospitals, which is our Gurgaon, Indore, and Ranchi facilities, and the newer hospitals, which is Lucknow and Patna. You will find that we've seen very significant growth across the board. Significant growth in volumes, which is very important for us as you think about the patient response to us, the reaction that we get from our patients. And this growth has come not only in the newer units, but also in the more mature units, as Dr. Trehan mentioned, and the growth coming across specialties, including complex care. Now, when it comes to some of the mature hospitals, what we've really been doing is all along we've been talking about being focused in on executing the strategies that we had articulated during the IPO process about a year ago, around ensuring that we double down, refocus, strengthening our core assets, focusing on bringing in some of the best clinical talent, supporting them with some of the best technology. And that is playing out in terms of approximately 20% growth in volumes in our mature units. When you look at our developing hospitals, we continue to add in the capabilities, beefing out our facility in Lucknow. We added in during the course of this half year our radiation oncology services. That's been going well. We're scaling up on our clinical talent there as well. And Patna, which had seen a break even in our first operating year at March 31, we see that institution also doing very well, continuing to grow. A lot more to be done in both of these newer units in terms of bed additions and clinical talent additions. But we're very happy with the response that we've seen from the patients in terms of volumes. And yes, there is some amount of tariff realizations in our Gurgaon facility, but I think the bulk of the growth really being driven by strong response from our patients and strong volume growth across facilities.
Right. Well, let's shift focus to expansion then. And Dr. Trehan, you mentioned that with the new South Delhi hospital coming up, it would in fact link up your Gurugram hospital as well as the Noida hospital. So if you could just give us an idea about the kind of advantages it can bring, and also what is the thought process of actually having three hospitals, of course, in the NCR region. I'm sure there are plenty. If you could also elaborate on that.
So if you look at our methodology, our way of moving forward, we go create the highest end facilities in underserved areas, and we like to have this facility available to as many people as possible because our pricing is always moderate. So in other words, if you sum it up, it's highest quality of care with compassion and with affordability. So if this is the model we carry through wherever we go. So if you see our model, if you look at Lucknow, Patna, now Noida, and to come closer to Delhi, it completes the full circuit between the NCR area because of the fact that there is a lot of demand on us from these two areas also. Like people have to travel 2 hours, 3 hours to get to us in crowded traffic sometimes, and they still come. So we are also part of our philosophy is to take care of that highest quality that we represent nearer to people's homes, especially underserved areas. So that's basically the philosophy with which we are taking these steps moving forward. And it'll link up everybody. There will be a lot of advantages. There is advantages of sharing some of the talent, some of the doctors, because we have the kind of doctors that we have present in Vedanta represents a unique group of doctors who are of the last stop. So if you want to make it available to larger populations, this kind of planning and this kind of solid steps forward will help us a lot, will help the public even more.
Right. Well, fair enough. Pankaj, then when it comes to funding both Noida and of course eventually South Delhi as well, you guys are in net cash at the moment. Are you going to be looking to raise back debt, considering you guys have very recently been debt free?
Well, if you look at our balance sheet for the half year ended September 30th, 2023, you will see that, as you rightly said, we are in a very, very strong position. We have about 600 crores of net cash available on our balance sheet. And we do still hold a little bit of debt. This is despite the fact that we paid off about 400 crores of debt during this last period, from some of that coming in from the IPO proceeds. The other thing, though, that when we look at our projects, we've always looked at our projects as individual units. So we look at our Lucknow funding independently, we look at our Patna funding independently, and we will probably look at our Noida funding as well independently. As you're aware, there's always some value in having a fairly healthy capital mix of debt and equity, and we will continue to make sure that we try to optimize on that as far as possible. But safe to say that as an organization, we've been fairly conservative with respect to the amount of leverage that we like to take. Most of our projects are typically 1:1 on a debt equity basis, and I don't think that we will be unnecessarily levering up. But we will look at debt as and when it makes sense to take that on a project by project basis. But suffice to say that we are in a fairly healthy position with respect to our expansion plans and the cash that we have on the balance sheet. And also, if you look even at our cash flow generation from operations, it's fairly strong. We are able to convert a fairly large amount of our operating cash flow to cash, EBITDA to cash. And that's because the payer mix that we have is very, very healthy towards insurance and cash. So we feel fairly confident, not too many worries on how we will fund the expansion, but we will take appropriate steps as we move forward to make sure this balance is maintained.
Fair enough. Pankaj, just to take this forward, what kind of impact can it have on a near-term basis when it comes to profitability? I reckon that the depreciation number will go up considering this is an expansion, and perhaps some more expenses towards the new hospital. Can you give us an idea? Will this be an accelerated depreciation? Will be a written down method? Will there be any other component which can impact your near-term profitability going forward?
So if you look at the group as a whole and you look at the portfolio of assets that we have with respect to our facilities in Gurgaon, which, as I mentioned earlier, have also seen significant growth. If you look at Lucknow, which is now about 3 to 4 years old, you look at Patna, which is coming up on its second year of operations, and you look at Noida, we have a very, very good balance of facilities in terms of stages of maturity across the portfolio. And so what you will see is that, yes, there will be some initial operating expenses that will come in Noida as we get that asset operationalized over the next year and a half. But that will be offset by some of the operating leverage that will kick in with respect to our assets in Lucknow, which we can already see, as well as our assets in Patna, which are performing very well on a profitability basis. So at a portfolio level, we feel fairly confident that we will be able to manage both the expense and EBITDA metrics as well as the cash flow metrics to be able to maintain this. Of course, as you very rightly pointed out, as a asset gets capitalized, there will be depreciation charges, there will be operating expenses. So individual assets, you may see a certain amount of margin and depreciation increases. But I think at a portfolio level, given the good mix of maturity and newer assets, we feel very well positioned at this point in time to manage the future.
Right. Just two more questions then. Dr. Trehan, we largely have about a quarter of the revenues coming in from the heart super specialty, but there is a significant diversification in the group, and that is catering to liver cancer treatments and several others. My question then is, as we move into the next 1 year, are there specific pockets that the group is likely to take when it comes to investments, or will it be as diversified as the revenues are from here on?
So like I said earlier, we are driven by need of the population and the location.
Right.
Right now, we know that across the whole spectrum that we are in, people require a lot of intensive care, a lot of cardiac care, cancer care, neuro. So it's spread over all specialties. And if you notice the numbers, there is a growth in every aspect. We are only adding more and more things, like we are doing lung transplants, heart transplants, kidney transplants, liver transplants. So you name it, and we do it. So these facilities have to be provided according to the need of the environment. Needless to say, it will always be of a quality which is unmatched.
Right.
That's our DNA. And that's why you will see that we'd rather take positions in areas where we will, if there is no good facility, so we are not into acquisition, we will, if we find the right facility. It's not anathema to us. But at the same time, we do not want to step down from the quality of care that we offer. So right. Unless that facility, so we'll create our own, and if something is there which can represent, or we can modify it to bring it to the level that we are actually performing, then we'll look at it. But otherwise, we shall continue to take these giant steps as we move forward. And we will then, of course, fine-tune according to the needs of the people. But regardless to say that critical care means where your people are actually not able to find the right treatment in their environment, people who are suffering, people who, in spite of spending money, are being shortchanged in the quality of outcomes. So these are the kind of considerations that are on the table for us all the time. And that's right. Why we are taking very deliberate steps rather than just going willy-nilly announcing beds. Of course, the growth in the beds is already there. And like we've added many more beds even in the last quarter. And this will happen as quarter on quarter. But the basic thing is a very deliberate way. We don't right. want to go willy-nilly performing by number of beds. We perform by number of patients. And we are, like I said, we are not the most expensive. That's our DNA.
Sure. So lastly, we have active coverage on the worsening air quality across cities in India. My question to you in this case is that your view on the impact on heart health, or well, in general public health, and also how alarming is the situation at the moment, and how bad can it be should these levels of AQI sustain over the next 4 to 5 years?
It's to put it bluntly, it's a disaster. Disaster for the human being. The environment has many elements which actually adversely affect us at different levels. So there is the particulate matter, there are the noxious gases, there is toxic CO2 levels. So you're saying two things. One, people who are already having pre-existing lung problems where the particulate matter affects the most. And the smaller particulate matter actually gets absorbed into the bloodstream from the lungs. It's not only just it stops in the lung. So the primary target is the lungs, where people who already have asthma, bronchitis, pneumonia, ILD, all these people will suffer hugely. And it's not fair to them at all. So we have to give a different warning for those people. Then you have that, like I said, because these particulate matters and the noxious gases get absorbed in the blood, they affect the heart, they affect the kidneys, they affect the brain. So there's heart and create many people have noticed that they have developed diabetes. That means it's affecting the pancreas. So there is not an organ which it will spare because it travels by blood to the whole body. So that's why I want to stress it and take this opportunity for our viewers to say, look, it's not to be taken lightly. And that's what worries me, that the public itself does not create enough agitation to say, we don't want it to happen in next year, most definitely. So we need the warnings to be given on a daily basis so that people know that this disaster will happen again in this time of the year. And we should not act like we are surprised. We are just the fact that we are passive acceptance of the fact that it will come. I think that has to change. And as environmentally we become more and more aware, we must also become more active in preventing these things to happen.
Right. Well, so we can hope that the public as well as authorities to take note of these, and we can hope that things can improve. But on that note, would like to thank both of you gentlemen for joining us and taking us through the quarter's earnings as well as the outlook going forward. Thank you so much.
Thank you.
Thank you.